Find out from you. Any ideas on how we can invest even in these times and where we can put our monies?
Well, good morning to you, Joe Jackson. Good morning to you, Dr. Theo Achampong. And good morning to you, Madam Host, and of course, your listeners. Merry Christmas, and we all look forward to a brilliant new year ahead. The challenges we envisage notwithstanding. So, yes, it's a difficult time, we all know, especially in a country where it looks like all the investment laws seem to favor the sovereign. And in fact, if you look at the SEC directives or guidance, same as the NPRA and the many others, really, a chunk of our investment are supposed to be held with the government. And to the extent those rules or guiding principles do not even permit a lot of corporate and other asset classes, like in large quantities, really, it automatically puts a limitation on what you could do in this time where bonds or Ghana's debt stock is being restructured. There is a limit on, in fact, for 2023, I'm not expecting any issuances. In fact, even the budget says so on the local market. Maybe the issuances you would expect to be in T-bills and potentially rollover of some maturities. But even the acceptance for those is questionable because, yeah, if you are offering 15-year bonds, 10-year bonds, and stuff like that at 0% in 2023, 5% and 10% thereafter, really, it doesn't make any proposition for anyone to want to go into even buy any of the instrument you put on the market. And especially the question will be, what rate will even be rolling over those are that instrument, really? So they are rolling everything into a few bonds. And so we do not even expect some rollover transactions on the market. It makes the universe very limited for everyone. I mean, to try to, and especially for the fund managers who are looking for ways to diversify their portfolios and at least try to generate some good returns for their client. So I would say that in this time, the focus wouldn't be on returns because the returns are not available, at least within Ghana. The returns are not available. Maybe what we should be focused on was how to diversify our investment away from some of the risk associated with government. And so you want to look at some fixed deposits with some banks, and you also again want to look at the quality of these banks and then how they're able to withstand the shocks, their liquidity levels, their solvency levels. Because debt restructuring is happening, banks are about 33% exposed to, I mean, they hold about 33 or so percent of the total domestic debt stock, really. And so the non-payment of coupon and everything happening could affect some banks and potentially even affect their liquidity levels. So you want to do all of these analysis before you even go in there, not as a way of generating so much return, but as a way of diversifying. The stock market is a place a lot of people have shied away from, obviously because of the risk, the price volatility, and of course the economic cycle we have now where we are not turning our high growth and all of that. A lot of the sectors listed on the bears might not be on top, really, but nonetheless there are opportunities in there. In fact, even in this year where the market is returning some negatives, there are stocks on that bears that have generated so much return for investors, really. And so you want to look, and in these ones, you do not want to just use your own discretion, go to the market and purchase any stock. Talk to a broker, talk to an investment advisor, get inside, get the research reports, the fundamentals of those companies. And I believe when you do so, you might be able to find some good candidates for investment in these times, really, that you could expose yourself to. Maybe this is time to look outside the shores of Ghana. Have long wondered why, as a country and as an industry, we have over focused on investment in the local market. But then there are opportunities out there. I mean, for the BlackRocks, for the City Group, and the many other fund managers, insurance fund managers that come to Ghana to invest, they are doing so because they want to diversify. They want to expand their portfolio and they want to take advantage of other opportunities elsewhere. But it looks like we are over comfortable with local assets and all of that. I do not know of any rule in SEC directive or anything that bars us from investing in other security, so long as you can do the arrangement where there will be a custodian somewhere holding your security for you, and the transfer charges make sense, your FX exposure makes sense, and you can calculate your risk and then be on top of your game, really, think those opportunities are in there. So what about some bond in Kenya? What about some T-bill somewhere? Of course, these markets do not generate the very high and absurd returns that you get on the Ghanaian market, but the game shouldn't be about returns at this point in time. It's about stable income, diversification, and protection of your principal. And so if we can find some quality sovereigns out there who are offering good deals and their fundamental sounds right, those are opportunities. And I think there are apps available now that can even allow you to trade in stock exchanges outside Ghana, really. And so we need to explore that. And again, do your best to talk to an investment advisor, get inside, get the proper advice before you go into some of these things. Again, I think in every storm, there is opportunity. We are talking about how difficult it is now for the sovereign and how they might not be able to raise money. But I believe for the many fund managers who still may be mobilizing, especially the pension funds, which is, mandatory and they still will be collecting flows really, they need opportunities to invest. And I think this is time for the local corporates, quality corporates to take advantage. If we have said that the sovereign has crowded that corporate and there are no opportunities for them to issue much, or even if they do, they are not getting so much demand for them. I think in the time that the sovereign will be absent from the market, maybe for a while, this is time for us as an industry and for corporate to open up so that we could partner and put out some of these institutions on the market. It will deepen our market, it will create new opportunities, and it will create new asset classes for investors to participate in. And you could do so even at much lower rates, because if the sovereign is looking at 10 years and 10% over the long haul, and then a corporate, I want to think, comes to market maybe with a 2-3 year paper, I want to do 15%, I'm sure that is more than attractive, and fund managers will look at it favorably. So long as that corporate is quality and you prove that your flows or your cash flow support such a structure, I'm sure the market will be open to it. So I believe there are still opportunities in there for us to explore as a collective so that we can make the most out of the challenges we have presently.
It's